All right, let's dive into a topic that's, well, it's complicated, it's expensive, and it is absolutely essential if you're in the trucking business. We're talking about trucking insurance. And trust me, getting this right is something you just can't afford to get wrong. And I'm not being dramatic here. The stakes are just incredibly high. We're not talking about a little fender bender. No, one single mistake, one tiny gap in your coverage, and a business that you have poured your heart and soul into could literally be gone overnight. So, here's how we're going to break this all down for you. First, we'll get into why this isn't just your run of the mill auto policy. Then, we'll cover the absolute must haves you need just to operate legally. After that, it's all about protecting your gear, your truck, and your cargo. We'll also peek at some specialized risks, and then finally, we'll get into the nitty gritty costs, claims, and the huge mistakes you need to avoid. So, what's the big deal? Why is this so different? I mean, you can't just call up your regular insurance agent and add a semi-truck to your policy like you would a work van. No way. This is a whole different world. I mean, just look at this list. It really puts it into perspective. You've got these massive, heavy vehicles, which means when an accident happens, it's way more severe. You're also dealing with federal oversight from groups like the FMCSA. You're carrying potentially hundreds of thousands of dollars worth of someone else's stuff. And on top of all that, you have to meet the super strict insurance rules of brokers and shippers just to get a load. It all just adds up to a much more complex and, yeah, a much pricier system. Okay, so let's start with the absolute bedrock. These are the coverages you legally have to have in place just to get your authority active and, turn the key. And at the very heart of everything is your primary auto liability. It's pretty straightforward. If your truck causes an accident, this is what pays for the injuries and the property damage to other people. Without this, you cannot operate, period. It's that simple. Your authority will get shut down in a heartbeat. Now, here's a little inside baseball for you. While the feds might only legally require you to have $750,000 for general freight, the real world, it plays by different rules. The number you're really going to need, the number that brokers and shippers demand to see, is this one, $1 million. That's not really a suggestion. It's the price of entry to get the good loads. And hey, just having the policy isn't enough. You gotta have the federal filings to prove it. Think of it this way. The BMC 91, that's like your hall pass. Your insurance company files it to tell the FMCSA, hey, this carrier is covered. And poof, your authority becomes active. The MCS 90, though, that's different. It's a safety net for the public. It basically guarantees that someone who gets hurt will get paid even in a situation where your policy might not normally cover the claim. So one gets you on the road, and the other protects everyone else while you're on it. Okay, so your legal liability is covered. Now let's talk about protecting your own stuff. I mean, your truck and the freight you're hauling are probably your most valuable physical assets, and they need their own special protection. Physical damage coverage is basically your truck's best friend. It's what pays to repair or replace your rig if something happens to it. It usually comes in two flavors: collision, for, when you hit something, and comprehensive, which covers pretty much everything else. We're talking fire, theft, vandalism, a tree falling on it, you name it. This is the policy that has your back. Now for a really, really critical one, cargo insurance. This protects the freight you're hauling, but, and listen closely here, this is a big but, it is infamous for its exclusions. For example, if your reefer unit dies and a load of food spoils, you're probably covered. But if that same load spoiled because you forgot to turn the reefer on, or you left the truck unattended in a sketchy area and it got stolen, your claim could easily be denied. You absolutely have to know what your policy does and does not cover. Your business faces risks that go way beyond just driving down the road. And that's where these specialized coverages come into play. They're designed to fill in the gaps that your main liability and cargo policies just don't touch. Let's just touch on three really common ones. General liability, that's for stuff that happens off the road, like if a delivery driver slips and falls at your yard. Then you have bobtail or non-trucking liability. This is a must-have for any owner-operator who's leased onto a motor carrier. It covers you when you're driving your truck for personal reasons, like heading home for the weekend. And finally, trailer interchange. This one covers any physical damage to a trailer that you're pulling, but you don't actually own, which is super common in this industry. All right, let's talk about what everybody really wants to know, the money. Let's look at what all this stuff costs, how these policies actually work when things go sideways, and the common, costly mistakes that can put your entire business in jeopardy. Seeing how all these pieces come together during a real claim really makes it click. So let's say you cause a multi-car pileup. Bam, your auto liability policy jumps in to pay for the injuries and damage. Your reefer unit fails and the whole load of frozen fish is ruined. That's a job for your motor truck cargo coverage. And if your own rig jackknifes on a patch of ice and gets wrecked, well, that's when you'll be calling on your physical damage coverage. See, every policy has a very specific job to do. So, the million-dollar question for literally every truck owner out there, why is this so expensive? What actually goes into that huge premium? Well, it's not random, I can tell you that. It's a calculated risk based on a handful of really key factors. This chart pretty much tells the whole story. The two biggest pieces of the pie, your driver's records, their MVRs, and how long you've had your operating authority. A brand new company with a brand new authority is seen as the absolute biggest risk, and that's exactly why their premiums are so high right out of the gate. After that, insurers are looking at your past claims, what you're hauling, where you're hauling it, and your overall experience. And finally, please, let's talk about the mistakes that can completely sink you. If you tell your insurance company you're hauling cargo worth $100,000, but it's really worth $250,000, you're playing with fire. If you say you only operate locally within a 300-mile radius, but then you take a load clear across the country and have an accident, you could be on the hook for a denied claim. These are not small details. They are the absolute promises your policy's built on. I think the biggest takeaway here is really a shift in how you think about insurance. It's so easy to see it as just another huge bill you have to pay. But it's not just a cost, it is the essential framework that makes it possible for your business to even exist and to operate both legally and safely. So at the end of the day, I want you to think of your insurance package like the concrete foundation of a house. It protects your livelihood, it protects your personal assets, and it protects your ability to build a successful, long-lasting company. So after all this, what's the one part of your own policy you're going to go and double check? Believe me, your future self will thank you for it.